Howdy there, folks. Welcome into today's video. A lot to discuss in today's video. What's going on in the market. Some very strange moves in some very specific stocks I want to show you in this video. Some moves from some stocks that I'm warning you, just be careful with some of these stocks. And first off here, I actually want to react to this little 3-minute clip. Now, I usually save all the reaction type videos for my new channel, which, by the way, just hit 10,000 subscribers. So thank you so much for everybody that watches this channel that has subscribed over the new channel. But I just want to react to this because yesterday I was kind of in my feelings because I saw somebody trying to stick up for Wall Street, okay? They were trying to put Wall Street on this pedestal of thinking like Wall Street is so smart and they know everything and, you know, they're so great in these sorts of things. And like that's usually like the first sign that somebody's kind of newer to the market, essentially, because no, okay? What the clip I'm about to show you shows what Wall Street really is, okay? And at the end of the day, the more you break this down, the more you're like, what are these people doing, man? They have no conception, no clue what they're even doing with this money that they get given, essentially, to them by a lot of individuals with a lot of money that somehow think these people know how to run money or something like that, and let's just put it that way. And this is a clip that perfectly explains exactly what Wall Street is and exactly how naive their thinking is and how ridiculous this is. Okay, let me play you this.
Precipice of either the mother of all bounces or a really nasty breakdown, and I have no idea which. Technically speaking, though, if this thing gets into the low 150s, you really can't be in it.
Well, requisite.
All right, I'm not even gonna attack the Josh Brown thing. I'll wait to save my energy for this next part. Okay.
And Talkington is in it, and she joins us now. So, what do we think about that from downtown Josh Brown? This thing's going to move big time one way or the other. I know which way you want it to go. Which way do you think it will go?
So I don't see in the charts a big move up. I don't see a catalyst that would call for that. I think the way you want to think about technical analysis is it's going to show the path of least resistance. So without any new information, it's a really good guide. And so I think Josh is spot on. The stock has been trading around 152 as a base and around 178 at a peak. So if it breaks below this and it goes into breaks below that 152 range, the next stop, Scott, is going to be the March lows when it hit around 140. And so I think you would need to see a catalyst to have that happen, or the market in general, you know, break down. So I think he's right, definitely spot on about that 152s. If it breaks that, you really have no man's land until 140. But I don't see that it's going to necessarily just on its own have a big move one way or another just because of what the charts are saying.
No, but it certainly sounds like you're concerned that it could be to the downside. And I'm curious if that in fact does happen. What do you do?
I kind of feel like I'm a tourist in this stock. You know, I bought the stock about 30 points higher. So I was relatively new in the name, but I still...
So she bought it around 188 roughly?
You know, even though they're estimating to do 26 to 28 billion next quarter, they have 12 billion in cash. If I believe the 2023 earnings, it's trading at 15 times. So it's like, this is a great cash flow company. But what I still struggle with is, at the end of the day, Scott, they're trying to monetize Oculus. And my kids have a pair at home, and every time I put them on, I get vertigo. They're very aware of that. A lot of demographic has that. And I still feel like it's too early in the game. And so I know they're going to be monetizing WhatsApp, which is really good for their business in India. So I'm a wait and see right now. I'm definitely not going to add to the position. I think Josh is right about looking at the technicals and see what happens here. And we'll see if I'm a tourist or I'm going to be on this ride for a longer time, but the jury's still out right now.
So is it a gamble? No, seriously. Is this just a straight gamble? Like, these are supposed to be Wall Street professionals. This is what you're dealing with on Wall Street. Anybody that tries to put these folks on a pedestal and thinks they're so smart, they know so much. I'm like, what? This basically sounds like it was a gamble. It was like, I really don't know. I got all these questions about it, but I threw some money in it. It's like, you were supposed to be a professional at running money. If you're a professional at this, you just take gambles. Just, let me throw it in a 188 and it dropped. Oh boy, I might have to sell now or something like that. Like what are we doing here? Okay. Like this is as bad, if not worse, than like newbie investors in the market that will throw, like I remember when I first got in the market, like I threw some money in some biopharmaceutical stock that I had no clue about, and I was like, wait, and then I started looking into it, and I was like, well, wait, there's all these things, I don't know if this is the right stock for me, and things like that. And that's what I see playing out in these professionals on Wall Street, and it's like, well, what are these folks doing? And the thing is, what you're watching here, happens all the time on Wall Street, where they're all of a sudden like buy a stock and then they're like, oh crap, I'm going to sell this stock, and it's like nothing. There's no new information. Everything we know is what we know now. Like what's going on here exactly?
I don't know. I feel like you're making the case to sell it. I'm surprised too, and I appreciate the honesty from somebody who actually holds the stock. And you really sound like you are moving towards the exit.
Well, you know what I struggle with is there's so many other stocks that are down, right? It's like I own NVIDIA. And so obviously we have some issues with, what the government's going to let them do in and out of China, which is a real issue. But I would rather is what I'm thinking through, well, I think NVIDIA longer term has a spectacular runway. I think they'll get through this. So do I want to wait in Facebook or take those funds and add to like an NVIDIA or add to an Apple?
How strong do you feel about that? Well, you buy it at 134 and it goes down to 114. How strong do you feel about that? That would be my question, because I'm sure you could have said the same thing a few months ago when you bought Meta stock, right?
Yeah, but that's just sharing what I'm thinking through as I'm in this trade. So I'm being honest that I'm definitely a tourist, and I'm not sure if I'll be here long term, because I do think it's a fundamental issue that how many investors are going to wait and see if they can monetize Oculus? Because the metaverse doesn't exist. Okay, that's Roblox, which I already own that. The metaverse is an idea that's 5 or 10 years out easily.
We'll see.
Okay. Thank you. Bryn Talkington. We'll talk to you soon.
Yeah, it sounded like a pretty that sounded like a pretty bearish case there, but this is what you have to deal with on Wall Street all the time. These folks get in these stocks, then get out of these stocks, and they go down a bunch and they sell them, right? And they want to be part of the winners, which is why if you watch a lot of CNBC over the last few months, which I've watched quite a bit over the last few months, you constantly see these folks say, you need to be in the oil and gas plays. Meanwhile, what continues to happen? Oil and gas continues to sell off. Now, as oil and gas continues to sell off, guess what they're going to start all saying? Stay away from the oil and gas plays. Stay away from those plays, because it just gets worse and worse and worse. These folks want to be associated with the winners and disassociate with the losers. There's no, they don't, a lot of these folks can't even keep up with the market returns over a 5-10 year span. They can't do it. And yet they're marketed as professionals, and some of these folks have, hundreds of millions or billions of dollars of money they're running for other high net worth individuals, and it cracks me up, man. It cracks me up, because when you really dig down here, you really start to see that it's like, wait, did they even really research the stock? Like did they really look at the stock all the way through before they bought it? Like there's no new material information here. What happened? Okay, so that's Wall Street in a nutshell. What you just saw right there. Okay, now into the market. So the past few days, Russell hasn't done too much. It's up about 0.8%, and the NASDAQ over the past few trading days is up about 0.5%, roughly. The reason I'm showing you that there is so when I show you these moves that some of these stocks have made over the last few days, you can see how abnormal some of these moves are, and that there might be something going on there. Let's just call it that, okay? Because the market hasn't done a whole lot of much over the last few trading days, okay? Starting out here, HNST Honest has made a surprising 22% move over the last few trading days, despite the market doing a whole lot of nothing. Now, when you see a move like that, I would call it strange-ish to see a 22% move like that. That could be potentially somebody, getting into this position, a high net worth individual, a small hedge fund, something like that. The big guys aren't going to really bother, with a under $1 billion market cap like an Honest, so it's not going to be like a big hedge fund. It could be a smaller hedge fund, which there's a ton of hedge funds out there that have, anywhere between like $50 million and $500 million in capital. So it could be one of those, maybe making a couple $1 million position or something like that. And usually when they're buying into these positions, they do it over several days. They don't buy it all at once, especially if if you're talking about, let's say, a $400 million market cap company, and you want to make, let's say, a $5 million position in that stock, even if you're buying over a few days, you can still spike the price. So that is just kind of something to keep in mind. So when I see a very, very strange move like that, there's been no material news with Honest over the past several days. The markets haven't gone crazy, but yet the stock's up 22% on no news, and the market just doing a whole lot of nothing, right? So there's that shows me that there's clearly some sort of buying activity going on out there. That's, let's just call it a little abnormal. That's putting up some buying pressure on that particular stock. We know the deal with Ulta's going through. We know the deal with Walmart, the big deal's going through as well. So we should start to see all that in the stores over the next few months. That's a huge deal for this company's underlying business fundamentals, and it could be somebody trying to get ahead of that because they know not only are the next couple quarter numbers going to be good, but 2023 numbers are going to be absolutely phenomenal for this company, and there's a high probability they could have at least one profitable quarter for this company in 2023, if not 2 profitable quarters for this company in 2023, which then gets them on pace for 2024 to be a full-scale profitable year for the company, which would be a huge, if you want to talk about it, just a massive move for Honest. As they get closer and closer to profitability, this stock will fly to the moon, okay? Target made an abnormal move. This is a big market cap here. Obviously Target's $70+ billion market cap. This one's up 5.4% in the past few trading days. What I think is probably going on here with Target specifically is I think people are getting ahead of the holidays. We know when it comes to a company like Target, they are one of the big beneficiaries of, let's just call it, holiday shopping season. And a lot of people like to play a lot of the retail stocks in November, December specifically. We kind of get what's usually called a Santa Claus rally. In Target, you're looking at a Target, it's a beaten down stock that everybody knows is stock in the stock market, right? It's beaten down. And if you can start to build out a little nice position in September, let's say, right, and into October a little bit, and then it does do a Santa Claus rally like many of these retail stocks can do in November and December, then at least from a trading perspective, the traders will look at that as, they could potentially get out before the next quarterly numbers are ever announced, unless they think they're going to absolutely tear it up when they announce their numbers at the end of January or something like that. But you kind of got to be ahead of these things if you're a trader. If you're a trader, one of the key things is you got to be first. If you're not first getting in and getting out of these positions, and you're not, let's call it very quick and ahead of the curve on all these sorts of things, you're usually going to get, let's just call it passed up. I think there's also a certain amount of investors that are building positions in Target right now because the stock's gone down so much. It's a good dividend stock. It's a cash flow machine. It's going to be here. They're going to continue to thrive over the coming years. They've gone through, let's call it a tough 2022, but in 2023 and in future years, I think they set up really nicely. And even myself, as a long-term investor, I started a position in my dividends only account for Target recently. So if it's attracting people like me, it's going to attract other long-term investors that are looking at this as a dividend play, cash flow play, and a low PE play as well. And so that's what's going on there with Target. But yeah, very abnormal move for that one. Tesla, another abnormal mover. This one's up over 5% in the past few trading days, when once again the Nasdaq's what, 0.5%. So this is basically 10x. Basically 10x the Nasdaq over the past few trading days, right? Tesla, I think as time goes on, and Tesla hasn't been as hurt as you might have thought it would have been hurt this year. Obviously, the stock's down a lot this year, but, I think if this was past years, Tesla would be down 50, 60%. And it's just simply not. And it's still trading around a $900 billion market cap, and that's very impressive. I think as time's ticking on, I think more investors and more funds are starting to realize the long-term story at Tesla, and the fact that this company is getting so much more profitable than anybody anticipated. Even bulls like myself, they're getting more profitable and better margins than I ever thought they would be at this stage in the game. And I think people are starting to realize and run these numbers and be like, dang, Tesla is probably going to get to 3 million cars a year, 5 million cars a year, and maybe someday 10 million cars a year as far as sales go. And I think what folks are doing for their numbers now and starting to kind of realize here is not just what those sales numbers mean, but I think they're starting to understand the supercharger, what that could mean, the services business, what that can mean for Tesla, right? I mean, if they're selling 7 million cars a year, Do you know how many different parts Tesla's going to need to sell over time, right? Because things break on cars, right? Sometimes they get in an accident, sometimes they get banged up, sometimes a piece doesn't work, right? I had to take my Tesla Model X in for alignment a couple days ago, right? That was $275, if I recall, for that alignment for the Model X, right? And so just think about this for a moment. When they're selling that sort of volume, imagine what their services revenue will go to over the coming years. Imagine what their supercharger revenue can go to over the coming years, and all these other things that people don't even see right now because they're so focused on just the automobile numbers themselves, right? And I think this story is just starting to be understood at a higher and higher level. And as time goes on, I think people will understand it even more and more and start to realize, oh my gosh, there's a lot of levers of revenue growth ahead for this company, and in terms of profitability and money reaching that bottom line, okay? Fubo is up over 7% in the past few trading days, which is, massive outperformance of the market here. With Fubo, I think there's a few things kind of going on in my personal opinion with this stock. I think after that, let's call it the investor day, I think folks are starting to understand the long-term opportunity with this company. I think it was very misunderstood for a while there. Let's just call it that. And that's for the longer term people that are starting to get in this and build out positions that are planning on, owning this for the next 3, 5, 7 years. I think the other component of this is I think it is going to attract some short-term traders, because with Fubo, here's the thing. College football season just started. NFL season starts tomorrow, okay? On top of that, we got World Cup coming up here in a couple months. And so I think when you add up all those different dynamics there, I think that bodes very well for Fubo, obviously in the short term, in terms of what they're going to report for their numbers over the next couple quarters. I think they're going to report very, very nice revenue numbers, and I think they're going to report some insanely impressive new customer numbers. And on top of that, I think they're going to report a number in which they're going to basically, and this is just my thought, maybe they don't do this, but I think they might even talk about, maybe potentially on the conference call, the next conference call or two, about how many people that were signed up for Fubo that are reactivating because now it's football season, which I think is a big metric that people kind of understand there. So when I look at it from all those kind of standpoints, I think it's going to be a pretty interesting ride for Fubo. And I think with their cash position, they're in a very good cash position, and they set expectations pretty darn low in my opinion, probably too low around their future revenue growth and how many new customers they're going to get. And I think their cash flow situation is going to get better faster than what the company's expecting and what investors are expecting there. So we'll see how it obviously all plays out, but I think there's some things going on behind the scenes right now, in my personal opinion, and we'll obviously see how that kind of trends over the next, let's call it 6 months or so, okay? Oat futures continue to just tank to a new low after new low after new low, and this is very important for all my Oatly shareholders out there. This is one of the best things that could ever happen to Oatly, is the fact that oat futures just continue to go down and down and down. We know there's two main ingredients in Oatly's products, okay? Water and oats. And yeah, water, is what it is. But when it comes to oats, this is a huge deal. And if you're talking about Oatly's margins, cash flow and profitability getting to much better levels in 2023 than they were in 2022, this is just one of several different factors that's going to, in my opinion, improve their margins dramatically in 23, their profitability dramatically in 23, and their cash flow situation. I don't think anybody's even looking at it right now or really understands it, except people that are really into the nitty gritty. But don't worry, Wall Street will look at it come 23, and they all of a sudden look at, oh my gosh, their margins are expanding. Oh my gosh, their margins just increased another 2 percentage points, another 2 percentage points. Oh my gosh, look at, they were losing this much last year. Now they're only losing this much. So then that's where the story starts to get really, really exciting around Oatly, okay? Oil futures continue to tank. Oil down another 5% plus here today. When it comes to things like playing oil, natural gas, it's a trader's game, okay? No one invests in thinking oil and natural gas. Like, if you're an investor, you usually think about it, there's better opportunities to invest, right? But traders love to play these things. But traders get very, very greedy, okay? And I explained this a month or two ago. And I basically said, for oil, we're running out of hype and excitement in the short term for oil. The thing was, when it came to oil, you had obviously Russia, okay? Then on top of that, you had going into what was called revenge travel summer, where everybody was supposed to be traveling around, doing all these things, right? And so this was just like a huge kind of short-term boost for the oil price. And oil price went absolutely, through the roof. And for the last month or two, I've been telling people, those glory days are going to be long gone, because now, if you're talking about we're in a recession or we're going into recession, if there's just a lot of recession fears, oil's not going to do good in that environment. Bottom line, okay? Just look at history. That's the way it plays out, okay? Second, the revenge travel summer is over at this point now. So what do you kind of have to go off of here, okay? There's not a lot to be super bullish about for oil. And keep in mind, everybody was already insanely bullish on oil. Like I talked about on CNBC, everybody talking about oil being the oil and gas stocks for the last few months, okay? So you had like kind of peak FOMO and excitement in that space. What do you got left? What do you got left, okay? And that's exactly what we've seen play out, and oil just continues to be in a tough spot. Natural gas, this is one of the biggest bubbles in the financial markets right now. I'm trying to tell you guys, this ain't gonna last. That's all I got to say about that. Natural gas is up 110% year to date. Bubble-licious, okay? Let me tell you a few things about natural gas, because natural gas was one of the first industries I really studied in like 2009, 2010, when I was trying to, really get in the stock market. And I even understood, I started to study the oil markets and the natural gas markets a lot more in kind of late 2010 and into 2011, because I was starting to get into a stock called Trinity Industries, which basically transported the product around. So I was like, I really need to understand natural gas and the oil markets in a pretty substantial way, okay? And I'll tell you something about natural gas, okay? We ain't ever running out of that stuff, okay? There's so much flipping flapjack in natural gas, you got no clue, okay? That's all I got to say. Just in the United States of America alone, I'm not even talking about the rest of the world. If you want to talk about a commodity that we've got way too much of, it is natural gas, okay? And so if there's one commodity I never believe in terms of its price ever being in let's just call it a sustained high rate, is natural gas, because that baby, they open up those fracking wells and man, they just frack like it's nobody's business. And there's just so much of it. It's just so plentiful. It's ridiculous. In the United States of America alone, never mind in these other countries. And so, that whole thing, that will start to erode over time. We had this FOMO bubble cycle, and, over the next, let's just call it 6 to 12 months, that whole story will erode and natural gas will go back to where it should be, which is not $9 or whatever it's been trading at recently, okay? It reminds me of, people get very caught up in these things. It reminds me back when, we did Millennial Money and it was the whole AMC stock craze back then. And, I basically said there was a, less than a 2% probability that AMC was going to $100 a share, which obviously, that's the way it played out. But in that moment, like, people get so caught up into these things, and it's like, these things have no good fundamentals long term. Like, natural gas has no good fundamentals long term, right? It's not there. And, people get excited about this, despite it having no good fundamentals long term. I mean, absolutely nothing. There's no brand there. We have so much of it, it's ridiculous. And it's just, you can get a bubble cycle, sure, but it's not going to last, okay? It's not going to last. And, if you're betting on things that have huge long-term, let's just call it bullish trajectories, it's a whole different thing. But when you're betting on things that have nothing going for them over the long term, it's a dangerous proposition, and you're likely in just a kind of a bubble scenario there, okay? Now, and that's why people get very confused and they screw themselves up when they used to talk about Amazon stock was a bubble back in the day. They didn't understand the long-term, trajectory of what Amazon's business model was going to do. People have tried to talk over the last 10 years about Tesla's in a bubble, Tesla stock's a bubble, and they don't understand what's going on for the long term. It's a big differentiation in the bubbles between things that are commodities or stocks that have no futures and companies that have insane revenue growth, margin growth, profit growth over the next 5, 10, 15, 20 years. And you need to differentiate those between this has no future, there's no growth in this thing for the next, let's call it decade, and there's massive growth here. And that's where you can start figuring out where the bubbles are actually at and where the bubbles are not at. Let's put it that way, okay? Now, housing stocks, something I do not believe in at all. I have no interest in playing these. Obviously, they had a good day here today. I'm not also short any of these. I don't have put options on any of these. But if there's one thing I don't believe in, whenever it rallies, it is these babies right here. And RH could be interesting to me at some point in 2023. maybe, or a 2024 play, but I'm in no rush to try to get into any of those sorts of stocks. At the end of the day, when it comes to the housing situation, it just continues to get worse. The 30-year just continues to kind of skyrocket. Mortgage demand continues to drop. Inventory continues to climb massively, especially for used inventory, which that's a horrible dynamic for the let's just call it the home builders, essentially. And as people get more desperate to sell, they will continue to drop price, which also is a bad thing for the home builders, because then the home builders potentially have to start dropping price, right? Or have to incentivize way heavier. Even Toll Brothers, I was on their latest conference call, they're incentivizing massively more than what they were just 3 months ago, just 6 months ago. And so that trend could likely still continue to play out, unless we get a scenario where suddenly the 30-year, is at an average of 3.5 again, or 4. When we're talking about 6%-ish type, 30 years, I mean, it's a horrible dynamic for the entire kind of market right now, okay? Travel stocks, I think travel stocks set up well for 23. 22 ended up just being a trick year for the travel industry. It's kind of funny how this works sometimes. 22 was supposed to be the year of the travel stocks, right? This whole group, everything, airlines, cruises, everything was supposed to do good. The hotel chains, and they all did crap, man. Absolute crap in terms of the stock prices. Now, a lot of those companies' fundamentals have improved dramatically in 2022 versus where they're at in 2021, and especially obviously 2020. But the stock prices are all, I don't want to say at 52-week lows, but they're much closer to 52-week lows and 52-week highs, and certainly than their all-time highs, okay? And so I think no one's really expecting much from this group in 23, and I wouldn't be surprised if, these stocks actually have a, let's call it a pretty darn good 2023, especially if we talk about a situation where oil price continues to drop. All right. A lot of these stocks have been gone, dead and forgotten now at this point in time. And everybody thought 22 was going to be the good year for these stocks. Do not be surprised at all if 23 actually ends up being the good year for these stocks, because no one ever expected it. Okay. Now, the Fed cannot stop talking. They can't, like, literally, I'm like, when did the Fed start having to talk in these interviews on a daily basis? Like, do they get paid for this? Is this how the Fed makes money nowadays or something? Like, they just do a million interviews or something like that? I'm like, well, what is the deal with these folks? Like, holy smokes, man. They make more dang commentary than YouTubers such as myself. Like, you got to be flipping my flapjacks. They might as well just start a YouTube channel called The Fed or something like that. People will watch it, apparently. Holy smokes, okay? So, Baynard came out today, said, we're in this for as long as it takes in terms of stopping inflation, and in my kind of opinion is don't even pay attention to whatever the Fed says over the next few months. Because here's the deal, okay? The Fed has not much to go off of right now. They have 1 month in which inflation went down, okay? If inflation goes down over the next 2-3 months in a pretty decent way, let's call it that, not like, insane, but just in a decent way. If the CPI continues to fall to the 7s and 6s, if PPI continues to fall, the Fed will change its tone actually very, very quickly. And what the Fed will be talking about 2 or 3 months from now can be a very different tone than where their tone is at right now. Let's just put it that way. Now, if inflation continues to be at the 8s and 9s, whole different scenario. Their tone will be the same exact as it is right now. But as long as inflation continues to drop over the next several months, watch how the Fed's tone will change. They change as they see changes in the market. But right now they can't change because we've had 1 month where CPI's dropped. We need to see 2, 3, 4. Then we start talking, and then the Fed can start having these little interviews, meetings, whatever, and they'll start, let's just call it, being less aggressive. And their commentary will change, and it'll become more accommodative to the market, and it'll give the market more breath of fresh air, guys. Hope you guys enjoyed this. As always, I appreciate all you joining me. If you're looking to apply to join my private stock group, the Financial Fortress program, and get access to all that, the Discord chat, the course curriculum, everything that's included, check out the pinned comment down there. Much love and have a great day.